Welcome everyone to what is sadly the final episode of How to Make Money in Stocks with Investors Business Daily. Now, since this will be the last show, we wanted to do something special and share with you some of the things that we've learned from IBD founder Bill O'Neill over the years.
Which is quite a lot.
Quite a lot.
We've learned a lot from Bill. We really wanted to make this a very special show, and we hope that you enjoy it as much as we did putting it together. But first, let's take a look at what the general market looks like. The market was flat after the Fed results were released Wednesday, but a September rate hike is maybe unlikely, but it's still a possibility. The indexes are holding up well with few distribution days on the market. The S&P is holding up tight, while the NASDAQ has really zoomed, and of course that's due to a lot of big tech names and big chip stocks.
Yeah, chip stocks have done quite well. You can see that divergence that Amy mentioned between the NASDAQ and the S&P in the daily charts. As Amy said, the NASDAQ has been moving steadily higher, while the S&P has been moving essentially sideways since mid-July. Hopefully, it will join the NASDAQ and jump out of that tight range and head higher.
Now, Apple reported better than expected iPhone sales. The company said that the addition of the iPhone SE to the iPhone lineup is going to help customers who love a 4-inch phone. And the stock moved bullishly above the 200-day line, which is something it has not done since April.
Facebook also posted another quarter of stellar numbers, with earnings rising 94% and sales jumping 59%. The stock rose on Wednesday and Thursday, but note how it gave back some of those gains the day after it reported, and it slipped a bit lower on Friday as guidance for the rest of the year caused some concern. But volume on the downside was much lower than on the two prior up days.
Now, Amazon said their cloud services had revenue of $2.7 billion for the quarter, which beat expectations, but their international sales are still not profitable.
Amazon stock has been on a tear since finding a bottom in February, and it's continued to find support along the 10-week line. Fellow tech titan Alphabet also reported well and bolted higher on Friday, but it gave back some of those gains.
Oh, it has been a much better environment for CAN-SIM investing.
Yes.
So, of course, now is the time, absolutely, to be sure you're keeping your watch list up to date and make note of companies that are due to report earnings next week.
And we do have some big names next week.
We do.
Have Tesla and Monster Beverage. And for a full list, check out the earnings calendar in the issue coming out this week of IBD.
Now, you can still stay on top of the market with the big picture column and various stock lists that are available on investors.com. And as a reminder, since this is our last episode, you can download over 200 episodes on iTunes.
Amy and I were lucky enough to work with IBD founder Bill O'Neill for many years before he retired recently. And as many people have, we learned a lot from talking stocks with Bill. So today we want to share some of those lessons.
Yeah, lessons learned from Bill. These are things that every investor should know because, of course, Bill is one of the legendary traders of all time.
Absolutely. Now, as we go through this, we're going to weave in some audio clips from an interview that we did with Bill that was great.
The best of Bill.
Right, back in 2013 for the 100th anniversary of this show.
And throughout the show, we're going to be showing you some images of the last 50 years of William O'Neill and Company, which was founded in 1963.
Right. And I should probably clarify, I didn't mean the 100th year anniversary of the show. It was the 100th episode of the show. Yeah, just to clarify there. Now, we're going to talk about some of the things that helped make Bill so successful. He may disagree with our list, but this is what Amy and I came up with. And first was his optimism.
Yeah, Bill is usually in a cheerful mood when you see him here at the office or when he's out at a workshop or whether he's speaking to a meetup group. And his upbeat personality is absolutely infectious, and it's fun to be around, just like his Mickey Mouse watch.
That
makes it so much fun.
Exactly.
That's what Faye gave him. Yeah. He has said many times, I've never met a successful pessimist.
That's right. And that's, of course, crucial for a growth stock investor. You have to be optimistic. And Bill certainly believes in the power of free markets and innovation and the stock market. And here's a short clip from our 2013 interview.
The biggest profit I made when I started and I had nothing was in Syntex. And when I bought the Syntex and it had a 4 or 5-fold move in, I think, 6 months, because I had the pill, which was a very interesting new product.
It's a game changer for sure.
Yeah.
The 3 stocks I bought just before that, I lost money on. Now, if I had gotten discouraged and said, oh my gosh, I've lost 3 in a row, I'd better slow down and maybe I better not do this.
Then you would never have gotten Syntex.
That's it. So you just have to keep on. You're going to make mistakes. You're going to have problems, but you never quit.
Now, no matter how many mistakes you've made as an investor, it's important to never give up. What if Bill had given up and he never bought Syntex, Matt, right? It was the maker of the birth control. He would have missed out on one of his biggest winners.
That's right. And we might not be here because of that, because that's really what launched everything in the
here.
future. That's right. Now, another key to Bill's success, and that of really any investor, is his focus on the new, whether it's new companies, new innovations, new demographic or industry trends. Going back in time, this is so interesting to see about whether it's Brunswick, right, with its automated pin setter for bowling, or the Price Club, big box store concept, or the iPhone. Wall Street loves that next big thing, and Bill always had his eye on that.
And he really focuses on this because in IBD, Bill added the New America section to profile companies offering new products or services that are in big demand. And this section of the paper really mirrors Bill's desire to find these new trends, these newer IPOs or companies that have new CEOs that have turned things around. And the New America section is designed, it always has been designed to help other investors discover them also.
That's right. And also another little story here, a lot of people don't know or wouldn't know, that the conference rooms here in the office are named after the best big winners that Bill had. So
That's
there is
right.
a Brunswick
There's
room
a Brunswick
here,
room.
here
Yes,
in the
there
office.
is.
Now, Bill never stops staying on top of these new trends ever. And you have an example of that with Lululemon, which really didn't have the demographics or didn't really have Bill as his target audience, right?
No, Bill, it's so funny. I don't think Bill's ever had a pair of yoga pants on, the best that I know. And I don't
I'm going to guess not. Yeah.
And I don't think that he does yoga. But you know what? I was at a trade show, and I remember this. He asked it was a huge, thousands of people in the audience, and he asked them, has anyone heard of Lululemon? One guy, only one guy in this big room had heard of the company. And Bill said, I think all of you need to go take a look at Lululemon. This was before Lululemon made its big run.
Right.
Now, what he had done is he did go into the store with his wife. He found that it was an upscale retailer. They had beautiful clothes. They were made well. They were colorful. And that whole yoga, that athleisure wear was just coming in. So Bill really does his homework. And when the company did come out, when that stock did take off, Bill was ready and he was in there buying shares.
Absolutely. He's made a lot of money off of retail stocks.
Yes, he has. That's been something he specialized at. Now, here's another short clip of Bill on how you want to focus on the true innovators.
You do not want a company that is a copycat.
Right.
That's copying what somebody else is doing. You want somebody that comes out with something totally new, unique, and different, and superior, and either cheaper or what all. And they're there.
Now, another key to Bill's success was his unending focus on education. He never stopped studying the market and his own trades, and this is even decades after he was enormously successful.
Now, Bill has read thousands of books on the stock market, but you know what? We've interviewed him many times, Matt, and he said there's only a handful that are really worth paying attention to. Gerald Loeb's The Battle for Investment Survival and Jesse Livermore's How to Trade Stocks and Edwin Lefebvre's Reminiscences of a Stock Operator are among his favorites. Bill also studied Jack Dreyfus, who was a successful fund manager and a brilliant bridge player, who also studied charts and was a tape reader.
So here's another clip from our interview back in 2013 with Bill. So I wonder, what traders or books influenced you when you were getting started?
Well, the first person that I can recall was Gerald Loeb, and he had written The Battle for Investment Survival, and he was market-oriented. He was a tape reader, really, and he came out of San Francisco, and he spent most of his time in New York. But I actually met him there, and we had a long conversation. He came down to L.A. one time, and we met. So the ones that I was always impressed with, I would somehow see if I could get to meet with them and just talk to them about things. And he was the first one. Now, the person that had an enormous reputation over the years, but it took some time for everybody to understand that, was Jesse Livermore. In other words, he was a really unique trader that made millions and lost millions. And the stories are great, and his book was very valuable. And so it started there. And then you just look periodically for anything that's worthwhile. The one thing I did learn is there are only about 5, 6, maybe 7 books that are really worth reading. But every professor in the country has written a book, and a lot of other people. So you want to find a book from somebody that you know has really done well, and there are some out there, and you want to read 2 or 3 of them.
Another secret to Bill's success, and that's certainly tied to his focus on education, is how he is truly a market historian, which is why he began this benchmark study that he launched over 50 years ago.
Yes, and William O'Neill and Company has research on, they keep going, it's ongoing, but we have research going back to 1880, more than 27 market cycles of the biggest winners, which have been put into a collection of model stock books that Bill and the portfolio managers have studied throughout the years with the quest of finding tomorrow's biggest winners.
Now, that study, of course, is how Bill discovered that the best stocks, they typically have these 7 traits just before they take off, and that's what he used to develop the CanSlim system.
Now, Bill was talking to us about how much is new. There's not much new in the market. You know, you keep going on, so history repeats itself.
The one thing I don't think anybody realized was that there really is nothing new in the market, and that the patterns you see today were there 20 years ago, 40 years ago, 60 years ago, 80 years ago, and it doesn't make any difference what the time was. Now, there were different people making those patterns, so there's not really that much that's new, and it was shocking to me when I went back to get old leaders, 50 years ago or 100 years ago, and plot out a chart, and there's your cup with a handle, and there's your flat base, and they're all there. And it had been there for years.
Yeah, whether it's Tennessee coal in the late 1800s until Apple 2004, same thing, same cup with handle.
It should tell you that, well, my gosh, this has been going on for a long time. How come more people haven't figured it out? Well, a lot of people are just a little bit too lazy, or they listen to what somebody else has to say, and you got to dig around and look, but the patterns are the same, and they haven't changed.
Bill's also a man of incredible discipline. He eats healthily and he works out regularly. And as legendary trader Jesse Livermore said, a good stock trader is not unlike a well-trained professional athlete who must keep the physical side of their life in perfect form if they want to keep up at the top of their mental form.
Now, what's striking about Bill is how unemotional he is about his trades. And if he's wrong, he's gone. He's just out. And he's not one to sit there and wring his hands and see a loss get bigger and bigger. He just moves on. And that takes tremendous discipline to do that.
It sure does. And Bill really loves studying stocks, charts, and market cycles. Bill is also humble. Now, here's a very cute exchange that we had with Bill about doing what you love and how the market makes everyone humble.
I think you have to love the area you're in, and you have to really be fascinated or interested in the stock market so that you're going to go out and read everything that's written out there that can possibly be good, and that's where you start. And so you're going to devour everything that you can find because you're really fascinated with this whole thing. So they all will read all the books that are there, and they'll do their studying and their homework, and they'll get it down. If you do all this reading and studying, and you've been in the market for a year or 2 or 3, you come to realize that you have to be a realist, and it isn't how you feel or what you think or what you believe. Every time you make a mistake, correct it, and you correct it as soon as you can. So the average loss should be 3, 4, 5, 6, 7%, and that's it. And you go on to the next thing, and you're going to make mistakes. So you have to learn that. And so it's almost automatic with anybody that's going to do well is that they form certain things like that. So it's not their opinion or their brilliance. You can take the brightest lawyer in town, and he could lose his shirt in the stock market. So you've got to learn the elements and execute them.
And what about humility?
Well, if you've been in the market for a little while and you're
gonna
serious about it, you will acquire some humility. All you have to,
Right.
to get hit between the eyes a couple of times and you wake up.
Right.
One of the most helpful factors that countless investors have learned from Bill is how he focuses on the fundamentals, the chart, and the market all in tandem. And that gives all of us a tremendous advantage. Bill may really like a company, but if the market is weak and that stock isn't acting right, he's going to stay away from that stock. Again, that takes discipline.
Yes, it does. And in many discussions with Bill, he has told us that the chart trumps everything. So no matter how much he may like a company, he has to look at the chart. If the chart doesn't show accumulation within the base by professional investors, he will pass and he's going to go look for another stock. So here's a chart that was marked up by Bill.
You can see how intense that is, and he
Very
does that all the
intense
time,
time.
right? That's a lot of research and thought. Now, portfolio manager Mike Webster told us a funny story on the radio show a while back.
Many funny stories.
Many funny stories, but this was one of them where Bill was really excited about the prospects of this certain stock, and both he and Mike had it in their portfolio. And then a couple of weeks later, it really wasn't acting right. And Mike was a little bit nervous because this was early in his career as portfolio manager. And he was thinking, should I really sell this stock that Bill didn't like? But, he stuck to his guns and he sold it a few days later.
Now, Mike went in kind of sheepishly to Bill and he said, well, that stock we were talking about that you really like so much, I sold it. And Bill said, yeah, I got out of it 2 weeks ago.
That's right.
So one of Bill's greatest traits as a legendary trader is the ability to be nimble and flexible.
Absolutely.
And he could be extremely bearish and 2 days later turn bullish.
Absolutely. Now, last but not least, having sound sell rules and the discipline to stick with them has been key to Bill's and really every investor's long-term success. Now, here's a clip where he explains how he came to understand the importance of having sell rules.
I remember very early on, it took me a long time to kind of figure out, okay, here's what you're looking for. You're looking for a pattern, and you're looking for big earnings, and you're looking this and that. And I finally did it, and I bought a bunch of these things, and they went up, and whoopee, wasn't that great? And it never dawned on me that there was something missing. And how did I find that out? Well, the hard way, that you also have to have sell rules. My. So you have to have buy rules, plus you have to have sell rules. Otherwise, everything's going to top at some point, and you better realize when it's topping and get out of the thing. So you have to learn through trial and error, and I found that out by realizing, gee, I was buying the right stocks and at the right time, and I had no sell rules. So I had to start all over again, and okay, now what are going to be the sell rules? And that's when it started to happen. You put all the little pieces together.
Bill O'Neill's a man who has worked very, very hard, and he's found stock market success through studying, discipline, research, and following the CAN-SLIM system, which searches out for the Rolls Royce of stocks, outstanding earnings, sales, return on equity, and other strong fundamental characteristics, as well as strong technical chart patterns.
Now, to hear the full 3-part interview that we've been playing clips from, just visit our site at investors.com/investingshow.
Now we're going to come back, we're going to take a little short break, and we're going to have some really insightful quotes from Bill and from other successful investors.
Now, who doesn't like a nice, pithy quote, right?
Yeah,
We all
sure.
love those.
Sure.
So in this segment, we're going to go through a few of our favorites from IBD founder Bill O'Neill, as well as some other successful investors and other famous people.
Yes, okay. Well, Bill has a lot of pearls of wisdom that are stated in very simple, easy to understand language. And I think that's one of the things that everybody really loves about him. He really makes the market easier to understand. He makes sense of the stock market, and his goal is to really help investors. And he's a brilliant teacher.
He really is, and that's true. He really does in his heart want to help people succeed.
And that's rubbed off on us, I think.
Absolutely. Now, I always love this quote from Bill. Diversification is a hedge for ignorance. Bill is, if nothing else, he is a contrarian at heart, and he's willing to question conventional wisdom. And this shows that. Now, he's not saying, to be clear, he's not saying that all diversification is bad. What he means is that diversification, just for diversification's sake, is not that guaranteed safety net that some people think that it is. You're better off studying and then really understanding the few stocks that you buy and then watching them and the market very closely.
And Bill has been known to whittle his portfolio down to just a handful of stocks. He really looks for those giant market winners, and he doesn't want to over diversify or dilute his portfolio with a whole bunch of stocks. Now, one of my favorite quotes comes from legendary trader Jesse Livermore, and that is, "Markets are never wrong, opinions are." And as I teach out at the workshops or at the meetup groups, I try to remind myself of this all the time when someone asks me a question. So stay away from opinions and just go with the facts.
Right, and it also doesn't matter what you thought last week if the chart action now has changed. And we joked in an old episode about how Bill is numble, and that is both nimble and humble, and he doesn't let his ego and his emotions cloud his decision making.
You had to bring that back, didn't you?
I love that
You did
word.
numble.
I'm kind of proud of it. Maybe it'll be in the Urban Dictionary at some point.
All right, so Bill says you cannot go by what you think or what you feel. You must see what is actually happening in the market and with leading stocks. So stay in the moment. Try not to form opinions. See what the chart action is telling you with price and volume.
Now, of course, you can't discuss quotes without having one from Confucius.
Oh, no, we're going to go to Confucius.
One that he
Here
said
we
was,
go.
"Life is really simple, but we insist on making it complicated." That certainly applies to investing too. Investing is not easy, and there are a number of pieces to the puzzle, but many people overcomplicate it. So remember that the core focus is to buy in an uptrend and take defensive action when the market is weak. Focus on companies with a new innovation that's driving big earnings growth, and look for stocks that large institutions are heavily buying and avoid the ones that they're heavily selling. If you keep those three core things in mind, you'll be all right.
Okay, in my book, I have a quote from Yoda, and it really applies nicely to the stock market. Do or do not. There is no try. So to become the best trader that you can and to achieve the highest returns possible, you must stick to a set of rules, and remember to stick with the CAN-SLIM principles, because that's going to help you find the market's biggest winners.
Now, I love this quote from Bill too. "All stocks are bad unless they go up in price." And that speaks volumes about how unemotional and unattached Bill is to any stock. He may admire a company. He's a big historian studies business and businessmen all the time. And he may admire the company and the founder that built that company, but if the chart, the market, and the fundamentals are not right, he's going to pass.
And a very uplifting quote from Bill is, "Don't ever get discouraged and give up on the lifetime of opportunity that the stock market will provide. Stay positive and never give up. Anyone can become a successful investor."
Now, the best way to tap into the many valuable lessons and quotes that Bill offers is to read his classic book, How to Make Money in Stocks. And also be sure to listen to our 3-part interview with Bill, which you can find at investors.com/investingshow.
Bill's book has sold millions of copies. It really is the Bible of investing. Now, Matt's book, How to Make Money in Stocks Getting Started, is terrific for learning the basics of CAN-SLIM and understanding the strategies that are going to help investors become more successful. And my book, How to Make Money in Stocks Success Stories, is going to inspire you, I hope, and help you find the market's biggest winners.
You can find links to the books, our interview with Bill, and lessons on how to put the CAN-SLIM system to work for you on our website at investors.com/investingshow.
Now, we have nearly 5 years of shows that are available through iTunes, and you can download and listen to them. That's more than 200 shows. So be sure to check them out and continue your investing education. We have a lot of people to thank who have helped us with the show. And of course, two of the biggest names that we need to thank are Bill O'Neill and Kathy Sherman. They have pushed us to really be the best that we possibly could be. And I can't imagine having two better mentors or being luckier to work with both of them.
Right.
They also were absolutely key and instrumental in the helping of the editing of our books. And we are eternally grateful. I am certainly for all that I've learned from Bill and from Kathy and the opportunities that I've had here.
I'll definitely second that. They've been great mentors and also inspirations for both of us.
And
no
the
question.
biggest cheerleaders.
Absolutely.
The biggest cheerleaders
Absolutely.
ever.
That's right. Now, we also, of course, want to thank you, the audience, for listening to us
Yes.
all these years. It goes back to November of 2011 for the radio show.
It does. This has been 5 years. We've
Yes,
been together.
almost.
We have been. Thank you so much. You guys have sent in so many nice comments. We have been humbled. We've been delighted to be your host. We have just learned from you, and you have helped bring out the best in us, too. So thank you very much, and I hope to see a lot of you out at the workshops.
Absolutely. Now, we also want to thank some of the people who've helped us behind the scenes, and that includes Chet and Alex from AM 870, which aired our show for many years, and the whole team at AM 870. It's a great group of folks up in Glendale.
It is Salem Networks, and they have been great to us. And we were a big part of the family. Our radio show ran for 4 years, very steadily with them. I've also worked with the AM 870 people with a lot of the Wealth Summits. I've done a number of those,
right.
and that's just been delightful. They've been great people to work with.
And of course, we also want to thank our producer, Paul, who's put in a lot of long hours to actually put the show together and make sure it goes out on time.
We are only so good as the people that help us, and Paul has been instrumental. He's over here in the producer's corner. He's done a lot of editing. He makes us look much better than we are. Trust us.
Right.
He makes us look much, much better. Paul, thank you from the bottom of our hearts. I also want to thank our many guests who have come on the show, too numerous to mention, but thank you so much for giving us your time.
And we also want to remind you that you can still hear or watch all of the episodes for both the radio show and the video show on iTunes.
And I want to say a special thank you to all the meetup leaders who have given so much of their time to help people, to help other investors with the meetup groups.
An incredible amount of time.
An awful lot. Volunteer time.
Yes, and a lot of the guests that came on our show were actually meetup
Meetup
organizers, and they've spent tremendous amounts of unpaid time as volunteers just to help other people have the same success that they've had.
And these are people that I will be very proud to know for the rest of our lives, and we do not want to lose touch with you, so please do stay in touch with us. So the easiest way to stay in touch with me is on LinkedIn.
And you can actually stay in touch with both of us on LinkedIn, Facebook, and Twitter. For Amy, the handle is IBD_A Smith, and for me, it's IBD_M Galgani. And you can also reach us by email. That will come to both of us at investingshow@investors.com.
And again, we want to say thanks so much for the support for the last 5 years, more than 200 episodes. We've really enjoyed it, and we've just learned a lot.
Yes.
And now I have to say the toughest goodbye. Matt, you've been a good buddy.
That's been great.
There's nobody he didn't want to do this. This is me, of course. He said not to do this. Matt, there's nobody else. I'll do this without getting sad and maudlin. There's nobody else I would have rather have done this with. We've had a lot of fun. We've learned a lot.
Yes, we have. Same here. Really enjoyed doing it. But, there's one thing a lot of people probably don't know is that when we first started this 5 years ago, I was actually 6'2" and had a full head of hair. So I'm not sure what happened along the way, but it has been fun working
It was working with me, the stress of working
That's
with
right.
me. No, it has been kind of like a marriage, and we've had a lot of fun.
Absolutely.
We've learned a lot.
So thank you all again for tuning in for so many episodes and so many years.